In this channel, we will have a discussion about cost accounting, managerial accounting, and financial accounting. But we have a separate video about managerial accounting and financial accounting. But how is cost accounting differs from these three subjects? The first one is, let's look at about financial accounting. A financial accounting is an accounting that is used to prepare information for external users or for external purpose, and as the name indicates, it says a financial. This means it will only look at a financial things, or it will look things from the financial perspective, because there are different events that can happen in the company. It might be a financial information, there might be a financial information that are produced, and there might be a non-financial information. However, as the name indicates, financial accounting only selects those financial informations and present it for external users, for external purpose. And in the process, the financial accounting might use IFRS rules, GAAP rules, depending on what standard your country is using. The report should follow some time interval. We know there are two kind of reports: external report and internal, or a report that's made for external purpose and a report that's made for internal purpose. For internal purpose is what we call for an information that's presented or reported for the managers, or any, it might be for any workers, that is one of our company's body. But if that body needs an information, and as an accountant, as a managerial accountant, if we want, or if we have to present that information for internal user, we can say that report is made for internal purpose rather than external purpose. However, the one who needs this information, if it is an external party or external body, the information that we present for this external body is, or we can say the report is made for external purpose. And the reports that are made for external purposes, or the one who can be made using a financial accounting, they should follow some interval of time. They have a specified pattern, gap, or period in between. For example, if they are made once a year, they should follow this year interval in order to be presented. However, for external purpose, if the reports are made for internal purpose, not for external purpose, they might not need to follow this specified interval of time. They might be made whenever the manager needs, or whenever that body that needs this information needs that information. So they shouldn't have to follow a specific path or a specific interval of time like the external one. However, for the external, the reports that are made for external purpose should only follow some interval of time, even if in between, for example here, in between, if those external bodies needs that information, it will not be prepared unless it keeps the times end. Unless the time for this statement preparation comes or has been reached, you don't have any obligation to present this external report whenever that external body needs it. Probably you might present an information for the past year, but you cannot present a new information depending on a specific customer's need, or depending on the specification of that external body. This is the difference. This is a financial accounting. The other one is a managerial accounting. A managerial accounting is the one which helps us to present data for external users, internal users rather than external users like the financial one. In managerial accounting, we should record the data or useful information for the managers that are useful for that manager or for that internal body body. So the information should be relevant and useful, that helps for that internal body to make a decision for the future, and these are prepared for internal purpose. Or a report made by managerial accountings are made for internal purpose. Sometimes even if it's not if it is a non-financial data, as long as it is relevant for that internal body when it is information, we might present a non-financial data sometimes also. So it should not be financial data all the time. As long as it's relevant for that manager or for any internal body that needs it, we might include a non-financial data only. So it shouldn't follow IFRS rule or any other specific formal standard. Hence, it's for internal purpose as long as that internal body and external body have understood that information. It might not be prepared using any kind of specific rule like IFRS or GAAP or any formal rules that makes things common. The third type of accounting is a cost accounting. It is used to know a product cost or information that can be used in both financial or managerial accounting. Let me make it simpler. For example, in a financial accounting, you might, as I have said, you might write any information in a financial form. However, when we present in financial accounting or a report which is made using the financial accounting for the external purpose or a financial accounting, let me say it's a balance sheet. In this balance sheet, there is something called an inventory. We have said that. So in that financial information, if we see inventory $50, how do we know to prepare this? How do we know that inventory costs us $50? The answer comes from the cost accounting. Cost accounting, it tries to know a product cost using different techniques. For example, if this inventory is produced in that factory rather than buying from outside, it is just, let's say it's produced in that factory, or our company is a manufacturing company. So in order to produce this inventory, we should know how much direct material, how much material we have used for this inventory, how much labors we have used for this inventory, how much indirect costs we have used for this inventory. Without knowing that, we cannot know that product's cost. So cost accounting deals with finding the solution, finding the product of the cost of the product by assigning different labors that spent on this product, materials that spent on this product, and different indirect costs that is spent for this product. Finally, it will give us the final cost of that product that can be written on the balance sheets when we prepare a financial statement for external users using a financial accounting. Also for managerial accounting, probably the manager might need to know some cost information in order to decide. So for internal purpose reports also we can use a cost information from cost accounting. So totally the advantage of cost accounting is to know or to calculate a product cost. It's not easy to calculate a product cost. There might be a lot of costs that spent on one product, or a lot of resources that are being used that is hard to allocate these resources or to know how much resources are specifically used for each product. So assigning that it will be done using a cost accounting. So totally this is the definition of financial cost in managerial accounting. Probably you might wonder that this cost information can be is that for external, the report is that for the external purpose or for internal purpose. A cost information is produced for internal purpose. A product cost report might be used for internal users, but it is also helpful to prepare external purpose financial reports. But when we prepare that using a cost information, we can say that we have used a financial information, a financial accounting, in order to prepare that external a report that is needed by external users. Because you don't have an obligation to show every resources that is allocated for each product or a cost information or a product cost information. You might present a product cost information for internal purpose or for internal users. Probably you might show it in the form of inventory or in a total when you present your balance sheet. However, you shouldn't have to show each direct material, direct labor or manufacturing overhead spent on this inventory when you present a financial report for external users. However, even if the report is made on a product cost information, how much direct material, direct labor and factory overhead that product is used, or a product cost report, if you prepare that, you might prepare that report for internal users. But financial accounting might take this final product cost when in balance sheets or in a income statement when it shows cost of goods sold, inventory and such any other informations. It might take information from this final cost of the product that's calculated using cost accounting. However, you will not directly present this cost information for external users. It's all about the definition of cost, managerial and financial accounting.